Peace, everybody. It's Grand Scheme of Crypto back at you once again with another video. This time, I'm going to be talking about the SEC, BlackRock's ETF, and Bitcoin, and how maybe we could see a denial for the BlackRock ETF in its current form. First and foremost, nothing said here is financial advice. It is for entertainment purposes only and bring you guys the latest crypto news and daily updates. As always, let's jump right into it. So, the SEC has tightened its stance, shaking up the Bitcoin ETF race. BlackRock's hybrid redemption model has met resistance from the SEC. Market concerns have driven major players to adopt the SEC's preferred ETF approach. And there's a little bit to dig into here with this article, guys, talking about the BlackRock ETF and the current model that it uses that allows pretty much for lack of better terminology, allows people to invest and it kind of determines how they invest, right? So as the race for Bitcoin exchange traded funds ETFs intensifies, the SEC has made its stance clear. Only cash redemption models will be considered for spot Bitcoin ETFs. This decision comes as ETF applicants like Invesco and Galaxy Digital have recently adopted cash creation and redemption models for their respective ETFs. Now, this is different from what BlackRock's redemption model is. They have a hybrid redemption model as stated, above here. So new SEC filings reveal a cash-centric approach to ETFs. So their updated S1 filings with the SEC state that the creation and redemption transactions will take place initially in cash. The SEC's preference for a cash redemption model stems from concerns over potential market manipulation and arbitrage opportunities associated with in-kind redemptions. Now, the cash creation model involves authorized participants depositing cash equivalents to the net asset value of the creation units. The fund then uses this cash to purchase the underlying asset, such as Bitcoin. In contrast, the in-kind creation models allows participants to deposit a basket of securities that match the ETF's portfolio, eliminating the need for the fund to sell the securities for cash immediately. So okay, so they're breaking down the two different kinds of creation models and yeah, why the pros and cons of each. So despite the SEC's stance, BlackRock has been advocating for a hybrid in-kind model, which combines elements of both cash and in-kind redemptions. However, Bloomberg senior ETF analyst Eric believes the SEC's recent actions indicate a firm commitment to cash-created ETFs. Bitwise, another ETF applicant, supports this view and has shifted towards a cash-only creation and redemption model. Bitwise initially had both in-kind and cash options in their filings, but has since opted for a fully cash-based approach. On the flip side, the SEC's insistence on cash redemption models for Bitcoin ETFs might limit market innovation by excluding potentially diverse investment methods. A strict preference for cash redemption could hinder the flexibility of ETF structures and their adaptation to changing market dynamics. While the SEC maintains that only cash redemption models will be reviewed, this doesn't guarantee acceptance for companies filing for an ETF with this cash redemption system. So why does this matter? The SEC's insistence on cash redemption for Bitcoin ETFs marks a pivotal regulatory stance impacting major players such as Invesco and Galaxy Digital. So this shift signals a definitive move towards solidifying the operational structure of these investment vehicles, potentially setting a template for future ETFs and influencing market strategies. So pretty much in a gist, this could delay or cause BlackRock to have to modify their ETF application um, or filing because they're opting, like I said, like it says here, they're opting for this hybrid sort of model, and SEC is kind of has a hard stance on this cash centric approach using um, that model that is called I think it's in kind creation model, or I'm sorry, the cash creation model. So yeah, guys, just bringing you guys the news. I'm not sure what's exactly going to happen and or when it's exactly going to happen. No one does, but you want to keep your eye on this BlackRock ETF because this is a major decision, just like the XRP, SEC decision was kind of a major turning point. So we'll just kind of have to keep watching. But that's it for this one. Make sure you guys check out the Discord community down below using the link. It's free if you want to discuss more about this news with some of the folks we have in there and myself. But other than that, you guys have a great day. It's the Grand Scheme of Crypto. I'm out. Peace.